Morning, everybody. It's Monday, the 28th of June. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate.
Happy Monday to you.
Yeah, and you.
Bit wet and miserable at the moment, but
Yeah, I think we've got this for a week or so, haven't we? Or most of the week, I think.
yeah, most of it. I think it brightens up Friday, hopefully, in time for my fishing trip.
Where are you going?
Just out into the sea on a fishing boat.
Oh, nice.
From Wallasey, yeah, so that should be quite interesting. Big game tomorrow, of course, England Germany.
Yeah.
The outside of the draw is shaping up quite nicely, isn't it?
Yeah, it looks all right, doesn't it?
So if we get through Germany, then it's either Ukraine or Sweden, and then obviously the Netherlands out yesterday, so we've got Czech Republic potentially.
Yeah, Belgium through, but they're on
the other side, aren't they?
They could. Oh, are they?
Yeah.
They could have lost De Bruyne, I think.
Yeah, and Hazard come off as well, injured.
Anyway,
let's get on to some market chat. I mean, it's pretty not a lot going on really this morning by the looks of things. I mean, we'll dig into some charts shortly, but in terms of what's going on with the Delta strain of COVID-19, that has seen some countries renew some curbs in terms of restrictions. Australia has placed millions of people under restrictions as the variant causes new cases, putting more pressure on the government to step up its lagging vaccination program. South Africa has banned alcohol and closed schools to combat surging infections. And Malaysia has extended a national lockdown, which had been due to end today. So we are all a little bit concerned now as to whether or not there will be another surge in the colder months, certainly in the Northern Hemisphere. So we'll have to wait and see. Matt Hancock has quit as UK Health Secretary. It doesn't come as a surprise to anybody that's seen what's been going on in the news with regards to that. And he's a fair, having been telling us to stay at home and social distance, he was sticking his tongue down the throat of his aide. So, yeah, not a great look. Boris obviously had to sort of separate himself from that a little bit because he's been caught having numerous affairs in the past. So
I suppose he could sympathise with him. So it was a bit of a quandary for Boris.
Indeed. It's some interesting news on the cryptocurrency front. The UK financial regulator has barred cryptocurrency exchange Binance Markets. That's not to be confused with Binance itself, which is obviously the global crypto exchange. The move is to extend a regulatory crackdown on the crypto sector amid concerns about struggles by firms to meet anti-money laundering standards, which has always been one of the major issues. So yeah, that's a bit of a blow. Hasn't really seemed to have any impact on the price so far, but we'll come on to the charts of that shortly and give you a rundown on our thoughts. Bit of a flat start to the stock markets today, and the US futures looking pretty flat as well. In terms of what's going ahead today and over the next couple of days, we've got the OPEC Plus meeting due to start on Thursday, so that could have an impact on oil. Not much going on the economic data front today or earnings, but we do have GameStop, which is going to start trading in the FTSE Russell 1000 index. So all these speculating traders on GameStop have pushed its valuation so high that it's actually going to be in the Russell 1000 index, which is quite interesting. Wait and see what happens with regards to its first day trading today. So let's get stuck into some charts. Steve, is there anything that's catching your eye that you want to sort of take the lead with today?
I'll jump in the charts. The one thing I did not see last week is this story of the South African crypto investment firm and the missing 3.6 billion Bitcoin. A couple of brothers scammed a hell of a lot of people. Africrypt website, and they've run off with a shed load of money. So another sort of like thing about having trading through a regulated entity. There's less chance of that happening. Hey ho. Let me start with, I'm going to dive into the indices first, as I've seen a little bit of action taking part this morning. We've seen a little bit spike up in DAX this morning, but after last week's quite bullish candle, it's sort of we're still being overpowered by this bearish outside candle. Didn't quite manage to get above the week before's high, and we've opened up around about where we closed last week. So I think on an intraday basis, we've sold that with a stop above the highs at the moment. So that's looking, and that was probably formed from the 4-hour chart. Our stop is above here, around about 90 something. So bit of a doji candle on the 4-hour chart. So that is pretty negative after this move higher. So one to watch there. That's just, I feel I've just got short just now. On the FTSE, we've seen a bit of a similar price action over the last, well, since last night. We've had 4 negative candles. We've broken down and we've gone below Friday's low as well. So a bit of pressure on the indices as we go into the morning. Dow Jones, again, shooting star formation formed on the 4-hour chart, so that's negative. NASDAQ doesn't do anything similar to that. It's not far away from its all-time high on this chart, coming in at 40,432. We're only 50 points below that. S&P as well, all-time highs coming in on overnight price action, 4,289, so just below 4,300, which will be a bit of a psychological resistance, but not much. But again, we're really overextended on this upward move. A lot of bearish divergence going on. If you look at the volumes or the oscillators, we are due a correction, but when will it happen? Who knows? Aussie 200 under pressure. This is forming a head and shoulders formation. Let me just draw it out. So we've got left shoulder here, neckline, right, the head, and it's a downward sloping, so not the greatest one. I'd really be looking at the more horizontal levels. A break of 7,209 would be, in my opinion, very bearish indeed. We're trading at 7,292 at the moment. China 50 has had a bit of a reprieve over the last few days. However, we have just formed again a bearish outside candle, which has engulfed the previous 4 candles, and that's negative within the Ichimoku cloud. So the Ichimoku cloud providing quite decent resistance at the moment, but you can see that this feels to me like a bit of a head and shoulders formation as well, although it's not really come from a real decent rally. It's only a small rally, but it's still the same sort of shape, same sort of formation. So I believe that China 50, as I've said for a good while now, is the one that's going to help propel the rest of the indices lower. Hang Seng had a really decent rally towards at the end of last week. Again, we formed a bearish outside candle on the 4-hour chart. So negative price action looking likely today, apart from maybe the NASDAQ and the S&Ps, who seem to be holding up quite nicely. Similar sort of price action, a lot of indecision around here at the moment in the Nikkei. Jumping on, let's take a look at commodities. Look at oil, that seems to be soldiering on at the moment. We've got we're in the 5th and final wave of the impulsive move higher, and looking for 76.80. We've talked about for a very long while now. We're about $3 away from that. That for me will form a band of resistance, and that is like to the 50% Fibonacci retracement level comes in at 79.30, but 76.80 for me is the real first resistance to test. On the Brent crude, we've got 77.60 coming in. It's downward trending resistance, and the equivalent 76.80 level in crude comes in at the on the Brent chart at 86.62. Natural gas, we've been talking about this as well. I talked about the daily chart on this for a while. Again, that's propelling higher than resistance and looking really, really cool. So I'm really pleased with that call, and that sort of highlighting that triangle formation, breaking, retesting, and then propelling onwards. Gold, what's going on in gold? It really feels to me like it's still under pressure. The dollar index is still holding firm, and I feel we've got more to the downside in gold. Resistance coming in at 1800. That'll be a bit of a psychological level and it's got close to testing really. Last week we got 1795, but we're getting lower highs now over the past 6-7 days. Formula bearish flag formation for me. So a break of 1755 is the one that should open up the downside, and I think we then target 1700, then 1680 area. Silver forming similar sort of formation, and we're really looking at supports below coming in at 2375, but bearish flag for me again on there. Copper, it's in a downward trend at the moment, just temporary. We still need to break below some sort of decent sort of congestion areas. 385 for a long time was a good support before we propelled higher. But yeah, we're having this corrective formation again in copper. Let's have a look at cryptos and Bitcoin. Bitcoin has reacted from the 30,000 level just below there, 28,788. We highlighted as a support level. It managed to break 30,000 but didn't close below it. That was really important. So it feels like we're in a little bit of we've got decent resistance coming in here at 36,000. Could be a decent level to fade. We're getting lower highs, and we're still in this channel. The real resistance coming up at 41,000. So I think cryptos may come in the spotlight again this week and could be under pressure with all this news filtering through from the UK, the FCA, and also the you sort of like have a $3.6 billion of crypto going missing in South Africa. It does have an effect at some point. Who knows when? But
surely it's got to impact confidence, hasn't it?
I think so. Yeah, I think that's the main thing. It's great having a cryptocurrency which is supposed to be really, really safe, but you don't get people robbing 3.6 million from banks very regularly. But it does seem to sort of like happen where these scams occur. It is going to have a bit of a dent on the confidence, and all you need is one of the big ones or the real Tether story to come out. There's a lot of sort of like people talking about Tether, and that it's not really. There's a lot of people that have sort of hedged Bitcoin against USDT, but there's a lot of people believe that the Tether really hasn't got enough a dollar behind it to sort of like be that supportive coin. Right. So the story's out there. You can read it all over the press that the Tether exchange should have more dollar. It should have $1 for every one Tether, but it hasn't. Yeah. It's got a lot less.
Right. Okay.
So
cool. Is that your roundup complete?
Yeah, I think that's it.
Superb. Very good. Okay, so on to the FX side of things then. Let's just get the correct charts up. Not loads to talk about today. Very much a continuation of where we left off last week, really. So we've seen this break of the downtrend on the dollar index, as you can see here. And now what we're seeing over the last couple of sessions is just a bit of a pullback. We've seen some buyers step in just in front of this support level here that we have at 91.43. So I'd say that's quite encouraging. Really sort of over the last 3 or 4 sessions, the price action has been very flat, but that might be a good thing, that price is consolidating above this support level, and eventually we are going to get a renewed push to the upside. So my personal view is that we will see support continue to hold here at 91.43 before an eventual push up towards this level here at 93.02, where there's an unfilled gap, and then above that we've got 93.43, which is the previous swing high that was posted back in the 31st of March. If we take a look at how it looks on the weekly chart, and why that 93.43 level is quite significant, because if it does break, then potentially what we have here on the weekly chart is a double bottom pattern. And if we measure the move from the low to the neckline of the proposed double bottom pattern, then we're projecting an upside move up to here, which is at 97.66, which is also a 61.8% fib level of these highs here from the 23rd of March down to those lows on the 4th of Jan. It comes in at 97. 72. So within 6 ticks, we've got two very important levels there that are potentially marrying up together on the longer term chart. So that's quite interesting. So still of the opinion that higher prices could be seen on the dollar index. And ideally, we'll be looking to buy on pullbacks to around about 91.43 is sort of the ideal look setup for me today. Looking at euro dollar, flip side of what we've just talked about on the dollar index, we've broken down some key support levels here, and in the last few sessions, we've been trying to retest this broken support, which should now be resistance at 119.85. And again, you can see a lot of sort of long-legged sort of candles forming where we've tried to push higher, but the sellers have stepped in and sent it lower. Price action not really going anywhere, but there are some increasing ranges that are occurring there. So my opinion is that we are going to head lower, and I'd be fading moves into this kind of zone here, potentially looking for a move down towards this blue line here, which I've got as being a neckline of this potential head and shoulders top. This is the daily chart. If this blue line is taken out, then we will complete the head and shoulders top. Ideally, I'd like to see it break this line because that's a horizontal support line, which I always find a little bit more reliable on these things, but quite interesting nonetheless. If that does break, then we are targeting much lower levels on euro dollar, and obviously that would mean higher dollar strength, so potential completion of that double bottom pattern that we just spoke about. Looking at some of the other currencies, Aussie US dollar, for my mind, this actually completed a head and shoulders top over the last couple of weeks, but we've seen it come back quite nicely, but it looks like this move is starting to roll over again to the downside. If you look at the shooting star candle that was formed on Friday, that's not a particularly healthy sign, and therefore I think we could see this start to roll over. So I would be fading any moves to the upside on this one, believing that we have potentially topped out, and we are going to see downside moves towards sort of 70, 60 over the short to medium term. If we look at New Zealand dollar, US dollar, not quite as clean as what we've just seen on the Aussie front, but again, price action looks to be sort of rolling over a little bit here and stalling in front of this resistance here, which is at 71.22. So these are obviously the riskier end of the currency spectrum, linked to obviously commodities. And for me, I think they are all in the process of forming tops, but it's not very straightforward, and will continue to pose challenging conditions. If we look at cable today, that's actually outperforming most of the other currencies as it stands. It's up by 0.35% today, engulfing all of the losses that it made on Friday. Still obviously a long way to go in today's session, but this broke out of quite a key channel, as you can see here. This channel goes back down to May last year, multiple touch points and a nice break of the trend line there. We've got some horizontal resistance that's formed now at 139.85, and we've continued to see the price action stall into that level. So for me, I think it's a case of fading any gains into this kind of zone here in anticipation of this sort of potentially forming a double top. We've got the obviously high here and the highs here. If we break down below here, then we would have formed a double top, and then we can start projecting lower moves down to 130.97. All of which I just touched upon is obviously linked to dollar strength and whether or not that actually happens. Charts suggest that it's potentially looking good and that it will, but obviously we need to see this play out and confirm and complete these patterns in a number of circumstances. So yeah, things are happening, but albeit at a slow pace. So obviously continue to keep you across this and our views over the coming days and weeks. Okay, so that's it for the FX roundup. We can now look at the guns to the head challenge from last week. Closed the week in a little bit of a whimper, really. Euro yen, I went short on Friday. It actually closed at exactly the same point that I opened it at 132.24. So nothing gained, nothing lost. And Steve, you were stopped out on your oil trade, although it did actually end up pushing higher, just maybe a little bit too tight on the stop loss on that one on Friday, which can happen. We've got a gun to our head and we're making calls live on these morning videos, so anything can happen.
Well, I'm ready to go again.
All right, he's keen.
The horse.
Go on in.
Looking at gold here, I'm going to go for the bearish flag, and really this would be the ideal risk reward, maybe a stop above 1802 on this. This will give me a 4-to-1. But I'm going to be a bit more aggressive as per usual and only go with a $10 stop. So getting short at 1782, stop at 1792, target of 1702. I think if it breaks the 1755 level, this could be a fast move. 1723 here looks like a bit of support, but the psychological level at 1700 would be in front of the 1677, which I think we're going to. So that's it, 8-to-1. Why not? I mean, as I say, probably better to do a 4-to-1 trade and have the stop a bit higher, but I'm Mr. Aggressive this morning.
Okay, well, I've just spoken about how much I think the US dollar is going up, so probably best do something linked to that. So what am I going to do? I mean, from an intraday perspective, none of them look great from an entry point right now, but let's go with this. I talked about US Aussie dollar, having completed a head and shoulders top pattern on the daily chart. Obviously, we've overshot the neckline on the potential retest, but I think based on that shooting star candle that we posted on Friday, that there's opportunities to fade this. So I'm going to sell it now. Just get rid of these. So it's currently trading at 0.7587. So let's get in there. Let's place a stop loss above the swing highs that we posted last week. And let's target a move down to here. These swing lows, so just in front of that at 74.80. So looking for 3-to-1 on that one today. Just to move back down there. I mean, ultimately, I think it's going lower, but obviously I'm looking at this from an intraday perspective. So hopefully that's semi-realistic, and maybe there's a chance that we can get there today. So it would have to be obviously a fairly substantial move, looking for 106 ticks, but you never know.
You never know.
Okay, so there's 2 trades for today. There's not much on the calendar that's going to move these ideas today. We've got the US Dallas Fed Manufacturing Index due out at 3:30 today. So not really much to go by. We do obviously jump into a new month during the course of this week. So what that means is that we will have non-farm payrolls on Friday. So that'll obviously be keenly watched, and we'll be building up to that throughout the course of the week. Steve, is there anything else for you that you wanted to talk about?
Yeah, just let you know, I've got the dentist this afternoon at 2:30.
Super. Is that true?
No, it's just a joke.
I know, I understand it's a joke, but I was wondering if it was actually any truth behind it.
No, I've actually got acupuncture at 3:30, but that didn't seem as funny.
Okay. I'm waiting for the punchline. Is there one coming?
No, that's it. I've got acupuncture because I'm riding a bike and my hamstrings and quads are tight and it really hurts. So
you're just a sadist, mate. You just want some pins in you.
Exactly.
All right, cool. Well, good luck with that, and we'll be back tomorrow. Trade safe, everyone.